If you saw the 2025 federal budget headline, $78 billion deficit, you probably rolled your eye or thought, here we go again. But here's what most people missed. This might actually be great news for real estate investors. Canada's capital spending just surged, and billions are being directed straight into housing, infrastructure, and rental supply. And for those of us using CMHC MLI Select to build multi-unit projects, this could be one of the biggest green lights we've had in years. I'm Darren from DK Wealth and Growth. And today, we're breaking down what this budget really means for you as an investor, why it matters now, and how to position yourself before the next policy wave hits. If you're new here, welcome. And if you've been following this channel, thank you for helping us build one of the strongest investor communities in Canada. Stick around until the end. I'll share what this budget signals for the 2026 CMHC changes and how you can stay ahead of them. So here's the short version. The government is projecting a $78.3 billion deficit for 2025 to 2026, and it is being driven in large part by very heavy investments in infrastructure and housing supply. The goal isn't short-term stimulus, it's long-term capacity building. We're talking about $50 billion for local infrastructure, literally everything from housing and transit to healthcare projects. CMHC's role in financing rental housing is being reinforced, which opens up more potential for multi-unit rental projects. And the National Housing Strategy is expanding its affordability targets to support purpose-built rental supply. Sure, the deficit number sounds alarming, but in reality, this is a pro-growth, pro-construction budget aimed at keeping housing starts alive while private credit tightens. Now, here's where it gets interesting. CMHC MLI Select is already the best financing tool for multi-unit investors in Canada, and this budget just made it stronger. It offers up to 95% financing, 50-year amortization, and below-prime insured rates, all tied to how well your project meets affordability, accessibility, or energy efficiency criteria. And with billions more flowing into housing programs, CMHC now has even more capacity to back these deals, which means more liquidity for lenders, faster underwriting, and broader support for builders and investors contributing to Canada's rental supply. That's exactly why our clients continue to close 8-plex and 12-plex projects across Alberta, fully CMHC eligible, cash flow positive, and insulated from short-term rate shocks. So, what does this mean for you as an investor? First, the federal government is doubling down on purpose-built rentals. That keeps MLI Select financing conditions attractive, especially with longer amortizations and flexible debt service ratios. Second, this is the window to stay disciplined. Yes, the environment is supportive now, but large deficits like these can eventually push borrowing costs up again if bond markets react or inflation resurges. That's why we structure every project to cash flow even in higher rate environments. It's not about speculation, it's about sustainability. And once again, Alberta continues to outperform. Lower land costs, no development charges, and steady immigration, driving some of the strongest rental demand in the country. When you zoom out, this budget confirms one thing. Housing supply isn't just social policy anymore, it's economic strategy. The government is depending on private investors, developers, and programs like CMHC MLI Select to fill Canada's rental gap. Everyone who acts in 2025 before the 2026 tightening will be seen as the visionaries. Because when these policy adjustments hit, those who already secured financing will be in a completely different position financially. These aren't quick flips or speculative buys. They're purpose-built assets designed to perform, even in a shifting economy. And if that sounds too good to be true, let's talk. You won't regret it. If you want to see how this plays out for your portfolio or how to position your next investment under the current MLI Select rules, click the link below or join our WhatsApp group for investor updates. We'll be breaking down how these 2025 budget allocations directly impact multifamily financing, what's changing in 2026, and why Alberta continues to lead Canada's rental boom. Thanks for watching. I'm Darren Kim with DK Wealth and Growth, helping you build wealth with real numbers, real deals, and real strategy.